Aloha folks, welcome to another video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to talk about a great dividend company. It is also a viewer request, so shout out to Louise for requesting this one. Again, if you have any requests for me to review some of you guys' stocks, drop a like and put it in the comments, and I'll definitely go check it out. With that said, please remember that this is not financial advice. I'm not a financial advisor. If you are new to the channel, just wanted to say aloha, welcome. Hopefully at the end of this video, you find this video informative and you will hit that subscribe button, and don't forget to hit the notification bell so you don't miss out on some of these videos that I put out. With that said, let's take a look at this company. So this company is CARR Global, ticker symbol CARR. So if you're not familiar with this, it is a provider of HVAC, security, and building automation technology. They're pretty much well known for air conditioning, air quality, and so if you want to learn a little bit more about this company, go check out their website. In the website too, you can also find some PowerPoint presentations. So some of their overview is their sales about 18 billion. So they have the HVAC, which is about 9 billion, and fire and security 5.5, and then refrigeration, which is 3.8. So you got all these stuff with the employees, about 53,000. Now if we go further to the PowerPoint presentation, you can see megatrends drive sustainable industrial growth. So by 2030, they would they assume the middle class population would be in the billions, and urban population will be as with there. So they're pretty much in a good position. So another thing that you want to take a look at is they have a strong foundation with leading positions here. I can see, so these are some of the stuff. So fire and security, so they're pretty much around. So then you got the CARR brands here as well. Now if we move along to Simply Safe Dividend, one of the things I want to look at is the dividend safety. Based on Simply Safe Dividend safety scores, they rated at 60, which is borderline safe. The dividend yield is 1.31, and then the market cap is 39 billion. This is considered a large cap. Moving along to the key metrics, you can see payout ratio is about 22%, which is very low for most companies. Forward payout ratio is about 27. Zero dividend streak, because they, in the past, this was a branch of Raytheon. So payout details, that you'll get paid quarterly, February, May, August, and November, with the annual payout of 60 cents. Moving along to the evaluation, you can see that it could be a reasonable time to invest. So now moving along to some of the financials, go down to the sales. You can see the last 12 months has increased, whereas the past 2 years it was in the negatives. Total sales is about 20. You can see outstanding millions. You look at the return on invested capital, you can see 8% is the preferred. The last 12 months it was 13. Return on equity, you can see it's jumped from 19 to 36, so it's a big jump from there. Now let's take a look at the dividend safety. You can see you can pretty much see you get paid on the 4th, the 6th, the 10th, and the 12th. So if you look at the dates, it's usually towards the end, and your payout's about 12 cents. So dividend yield again is 1.2, payout ratio is about 18, and then your total dividend is about 60 cents. Now if we move on to tip ranks, based on their analysis, you got a moderate buy, about 10, 4 buys, 6 holds. The time of this video is about $45. They have a 29% upside in this one to 59. 12-month forecast rated all the way in the high of 65. The average is about 59 and the lowest is 56. So pretty good amount of upward potential, I think. Now if we go to CNN Business, their forecast is a little bit higher with the 70 as the high, 58 in the medium, and the low of 49. If you look at over here, you can see 9 buys, 12 holds, and 1 outperform. Now going to Webull, based on 24 analysis, they rated it as a buy. About 50% said it's a hold, and then you got 33% said it's a buy, and then 16% is a strong buy. Now if you look at the price target, 70 is the high, 59 is the average, and 49 is the low. Moving along to Barchart, you can see based on their analysis for the past 3 months is pretty similar, moderate buy. The price target is 70, 58 is the mean, and the low is 45. Breaking down the analysis, you can see currently it's about 6 strong buy, 1 moderate buy, and 11 holds. Now if we go a little bit further to Barchart, you can see right here their technical opinion is a strong sell, 72% strong sell. So if you look down to the charts, you can see it has decreased the past 6 months. If you go down the month, you can see it was up around from 3.8 to about 8.26, and then it started to slowly consolidate here, and then now it's going to go back down. So I expect it to be a little bit more. They'll probably be finding the baseline. So if we go down to some of the key points in Barchart, you can see that support levels currently it's about 45, so it's in these between these support levels of 44 and 43. Now if we move along further to Simply Wall Street, based on their share price and fair value evaluation, they rated as 77% undervalued. Their fair value is about 49, current price is at 45. Now if we look at the current company overview, you can see proven track record with slightly overvalued. Debt is not well covered by operating cash flow. So now if we take a look at Robinhood, at the time of this video, it was negative 1. Now for the past week is negative 1. Past 1 month is negative 14. Past 3 months is negative 13. And then a year is positive 20. And then for 5 years it's up 200. So you can see April 2 is when it branched off. So if you would have gotten it about $15, you would have been up substantially. Pretty good. And then if you look down to their analysis, you can see 50%, 52% says hold, 43 said it's a buy. Their fair value based on Robinhood is about $40. Now going to some of the articles, this was on February 4, 2022. Was a smart money write about CARR Global Corporation. So if you want to read about this one, check it at Yahoo Finance. But what I liked about it was that it had some questions about whether it's hedge funds are interested in it. So you can see hedge funds interest in insurers was flat at the end of last quarter. This is usually a negative indicator. So moving along to some of these things, you can see that it didn't look like the hedge funds was interested in some of the for carriers. So I'll lead you read a little bit more so you can see what they want, what they're thinking about. So you can see here that they were more looking for like other companies like Datadog, which is a great company. Definitely something to kind of think about if this is something you want to invest on. So it says here, unfortunately, CARR wasn't nearly as popular as these 5 stocks, and hedge funds that were betting on CARR were disappointed as the stock returned -7 since the end of September through 31 and underperformed the market. So all right, guys, so definitely also check me out on Instagram, same name, Mr. Dividend Investor. So I do a lot of posts there as well. So for me, I like this company. I think it is a buy. I would wait for a dip too. If you're gonna go buy this one, I would wait for it. As you can see, it is earnings. If you go back to stuff, it is earnings February 8th, so it's gonna come out. My expectation is it probably gonna go dip, depending. Pretty much the market is pretty volatile right now. Sometimes you can't ever tell, so I don't want to bet on earnings because it's hard. Sometimes, you know, stocks goes up, sometimes it goes down. But if this is something that you're interested in and you want to invest on it, you definitely always try to, in my opinion, buy it on a dip. So I would wait after the earnings and see. But if you look at the 3 months, it's been pretty much going down. So probably still looking for a base, you know, because the end of this December was at 53. Now it's about 45. So we'll see where that dip, the resistance line is. So alright, guys, thank you so much for watching. Hope you liked this video. Definitely give it a thumbs up. As always, please remember to do your own due diligence. Please be safe out there. Stay cool. Keep investing. And I'll catch you guys in the next video, alright? Take care. Aloha.